if we enter a recession, then gold and silver are going to be the best things to have. When investors become convinced, and of course it's a continuum, we all become convinced at different times.
Right.
When the market becomes convinced that gold is staying above 2,000, I think we're going to see not only gold, but silver and the gold stocks really rip, because they are so under-invested right now, so under-owned.
Absolutely.
A broad market.
During the 2008 or 2009 recession, gold prices surged due to concerns about potential hyperinflation, while silver maintained relative stability as investors sought safe haven assets amid economic uncertainty. As global markets declined, gold and silver prices started to rise, driven by investor demand for the security they offer in uncertain economic environments. Silver has exhibited significant volatility this year, gaining 6% year-to-date domestically. Similarly, gold has experienced fluctuations, but is now steadily gaining momentum, with 11% year-to-date gains. Adrian Day, the founder of Adrian Day Asset Management, is optimistic about gold's close above $2,000, while predicting a surge in gold, silver, and gold stocks as investor confidence rises. He states that the last 2 months' trend of gold stocks outperforming gold is a rare and positive sign for gold investors. Gold stocks display strong seasonality because their price action amplifies that of their dominant primary driver, gold. Gold seasonality generally isn't driven by supply fluctuations like grown commodities, as its mine supply remains relatively steady year-round. Gold stocks have mostly ground lower to sideways since spring, leaving this contrarian sector really out of favor again. Yet the metal and its miners' stocks are early in their strongest seasonal rallies of the year. Moreover, Adrian links gold's path to diminishing confidence in the Fed's inflation control, emphasizing persistent inflation while recession signals. Gold prices reached a 6-month peak on Monday, driven by a weakening U.S. dollar, and expectations that the Federal Reserve might halt its interest rate hikes. Spot gold increased by 0.4% to $2,010.87 per ounce, its highest since mid-May, while U.S. gold futures mirrored this rise. Now, we present the clips of Adrian Day's insights from his recent interview with Wall Street Silver. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Well, what's really interesting right now, since the end of September, beginning of October, really, so only 2 months, but gold stocks are outperforming gold, which is something we haven't seen on a 2-month period for a long time. And silver is outperforming gold, both indicators of a turn in the market. But the gold stocks and silver didn't follow. That would be a bad sign, both outperforming gold by small amounts, admittedly, and only over 2 months, admittedly. But still, when you're in the gold space, you always clutch at straws, right? But I don't think we're clutching at straws here at the moment. Even if we see gold come back under 2,000, and it closed today over, which is again another positive sign, but we went over, then we came back, now we've gone over again. It's only a matter of time before the market really fundamentally turns, in my view. And Ivan, I'm thinking when investors become convinced, and of course it's a continuum, we all become convinced at different times.
Right.
When the market becomes convinced that gold is staying above 2,000, I think we're going to see not only gold, but silver and the gold stocks really rip, because they are so under-invested right now, so under-owned.
Absolutely.
A broad market. No, absolutely. I mean, I've been saying for 2 years now that gold will move when the market thinks that the Fed is not going to be able to control inflation. It's clear that we're slipping into a recession. That's very, very clear. I think even the first quarter of next year may be a recessionary quarter in the US, I'm talking now.
Right.
And yet it's also clear that inflation is not killed or squashed, or whatever word you want to use.
Mm-hmm.
You know, people look at the CPI numbers and say, well, it's come down a lot. Yes, it has come down a lot, but the last several weeks, it's began to move up again. And also in addition, you know, when you're looking at an inflation rate of 3% and the Fed's target is 2%, that's 50% off. I mean, they're not there yet.
Yeah, that's right.
So I think you're seeing these things happen at the same time. Inflation beginning to move back up, but certainly stubborn, the economy moving into recession, and the Fed simply not able to do what is necessary to kill inflation off.
During the interview, Adrian Day is optimistic about copper's future, noting a demand surge despite challenges in Chile. Copper prices in London were on track for a second consecutive weekly gain on Friday, helped by efforts to support the property market in top metals consumer China, a weaker dollar, and improved risk appetite in financial markets. Regarding gold, Adrian Day believes that the mounting resistance to central bank digital currency, particularly in the U.S., is a significant positive factor. More specifically, it points out that CBDC is nothing but fiat money on steroids, enabling an unprecedented redistribution of monetary purchasing power towards special interest groups and immediate monetization of public debt. Meanwhile, gold, considered a store of value as a physical commodity, cannot be printed like money, and its value remains unaffected by interest rate decisions made by the government. Let's get back to the interview.
Copper, I'm a huge bull of copper for all the reasons we know. You know, not only there is a huge step change, not a big change, but a step change in demand from the electrification of the power grid and the electrification of vehicles. And importantly, right now, there's unlikely to be any substitution for copper. Whereas there might be substitution for lithium, and don't everybody shoot me for that, but you know, I can see in 10 years' time that you have batteries which use something other than lithium. And let's not forget, 50 years ago, when I was a kid, we didn't have lithium batteries. But I think it's very unlikely that we'll get a substitution for copper in the near term. We might become more efficient in using it. That's a different issue.
Right.
So you've got a step change in the demand for copper at the same time that we really have a paucity of major copper mines, both coming on stream in the recent past, but also looking ahead. There aren't many major copper mines, you know, world-class copper mines in the pipeline. You know, these things change, ebb and flow. I mean, you've got the situation in Panama, with Cobre Panama. You've got Chile in particular. Codelco's CEO just stepped down after a year on the job, and his parting words were talking about the difficulty Chile was having in boosting production because of you know, a lot of things, including in that country, water. Now, offsetting that, you've got the possible changes, or well, the changes in Argentina that might make mining permits flow a little easier. And of course, there are some major copper mines in Argentina that have been on hold for a while because of a political situation and the currency situation. You know, if that changes, we'll get an increase there. But fundamentally, you know, these are all ebbs and flows, and you get this all the time. But fundamentally, we simply do not have sufficient copper in the pipeline to meet the expected demand. So I'm very, very bullish on copper. I think many other metals are going to do well. Metals and minerals are going to do well in a certain scenario, a scenario where the world does not fall into a recession. And so things like nickel will do well, uranium, of course. If we enter a recession, then if we enter a recession, then gold and silver are going to be the best things to have. Well, I think that's definitely a big positive for gold. It's not the only one, but it's definitely a big positive for gold. I think there's going to be resistance to central bank digital currency, particularly in the US. Many parts of Europe, less so. You know, in many parts of Scandinavia right now, cash is almost obsolete.
Wow.
And we all know that in stores in Canada and stores in London, You can go to a coffee shop, give them your $5. They don't want it. We don't take cash, they say. So, but in the US in particular, huge amount of resistance, I think. You know, you can take my dollar bills when you uncurl my cold fingers. And I don't know what I mean, obviously there are people in England, there are people in Canada that are concerned about it, but I think broadly speaking, there's more acceptance in many other countries for doing away with cash. And the two things go along together. You know, so long as there's a vibrant cash economy, you can't really have a central bank digital currency take over.
In November, month to date, gold has slightly increased while silver has gained by 2%, following an up move in industrial metal as well. What are your thoughts on the given prediction based on gold and silver future? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.